it is issued by banks. It is issued by banks and or financial institutions. It was introduced in 1989, and its denomination is 1 lakh, and
And
it's
now it
multiple.
has, I think now it has been revised to 5 lakhs. Please check it up.
Okay, sir.
Now it has been revised to 5 lakhs. Doesn't matter. Continue. And in the beginning, what you said, money market is for long term. That is wrong.
No,
Money
no.
market is
Money
for
market is for short term.
short term, up to 1 year.
Yes.
Yeah, continue.
Yes, sir.
Continue.
Certificate of deposit is issued by banks, and its maturity period is 7 days to 364 days. And for financial institution, it's for financial institution 1 year to 3 years. And it's a moderate risky instrument. Now I will discuss about capital market. Capital market is the market where companies and government of India can raise funds. Can raise funds, long-term funds, by issuing securities, and it is regulated by SEBI. SEBI is a Security and Exchange Board of India. It is a regulatory authority for securities market in India, and SEBI was established in 1988, 1988, but its act was passed in 1992. And its headquarters is in Mumbai, Maharashtra, and its chairperson is Mrs. Madhvi Puri Buch. And the capital market, the classification of capital markets are primary market and secondary market. Primary market is the market where securities are first issued issued for the first time to the public, and secondary market is where existing already previous securities issued to the public. And there is also types of capital market like IPO, FPO. IPO is the initial public offering. Initial public offering when unlisted company issue fresh shares to the public. It is called IPO. And FPO is when listed company issues fresh shares to the public. Then it is called FPO. FPO is a follow-on public offering. And that's it, sir. Thank you, sir.
Good. You taught nicely, but you were in a very great hurry. You thought that you will forget things, so you wanted to tell everything quickly. It's okay. Good. Not bad. But you are a finance student. So their expectation will be very high. Anyhow, thank you. Thanks.
Actually, I prepared well all things, but now I forget.
Yeah, very good. Thank you so much. After Manpreet, who came? Our Valar Madina. Valar Madina.
Yes, sir.
Yeah, please
Yes,
talk
sir.
about. Yeah.
I'm Balanmadi. I'm from Tamil Nadu. Thanks for giving me the opportunity to discuss about the topic money market versus capital market. And money market and capital markets or financial markets. The purpose of both money market and capital market is exchanging of money from institutions to individuals or group of organizations. Money market is a market that lends and borrow money up to 364 days. 364 days. It is a short-term fund, and a capital market is a long-term fund. It satisfies the requirement of a individual or organization for more than 365 days. In money market, the instruments under money market are treasury bills, cash management bills, repo and reverse repos, certificate of deposit, commercial paper, and commercial bills called money market. And treasury bills. There are the treasury bill is maintained by RBI on behalf of central government. By the central government to fulfill short-term liquidity requirement up to 364 days. The time tenure is three types. That is 91 days, 180 days, and 364 days. Trading is done on discounted rate. And another one thing is a cash management bill. Cash management bill or also discounted instrument like a treasury bill issued by RBI on behalf of central government, and the maturity of cash management bill is 91 days. Reverse and repo and reverse repos. RBI announces the rate through its monetary policy only, and the repo rate will have an impact on interest of the money which borrowed. And next one is a certificate of deposit. Certificate of deposit is issued by scheduled commercial banks or financial institutions. The minimum amount of certificate of deposit is rupees 1 lakh, and the maximum amount is
No, no.
multiple of rupees.
No, I think
It's 5
certificate of 5 lakhs now. Yeah, our material doesn't have, it has not been revised, but I think the minimum is 5 lakhs. Has anybody studied about that?
Yes,
Yeah. It is 5 lakhs only. It is
5 lakhs.
1 lakh was fixed some 20, 30 years ago. Doesn't matter. Continue.
The time period for certificate of deposit is 7 days to 1 year. Next one is called money market. It is a short-term financial market. The funds are transacted for a period between 1 to 14 days. And a commercial paper. Commercial paper is a privately placed instrument, and the companies, primary dealers, financial institutions are permitted to use this paper. And the net worth of the company should not be less than 4 crore. The duration of commercial paper is 7 days to 1 year. And the most important thing in this money market is DFHL, this Discount and Finance House of India. And these instruments are maintained by DFHI only. The headquarters of DFHI is in Mumbai. Then, is sir?
Yeah, actually, I'm showing you because everybody is committing this mistake. In spite of my telling you, you are telling wrongly. It is given here that the minimum deposit is eligible investors general guidelines. See here, the CD shall be issued only in dematerialized form and held with the depository registered with Securities Exchange Board of India. CD shall be issued in minimum denomination of rupees 5 lakh and in multiples of 5 lakh thereafter. The tenor of CD at issuance shall be not less than 7 days and shall not exceed 1 year. It can go up to 1 year also. Many of you are telling 364. It is only 1 year. Does not exceed 1 year. Valarmati, could you follow? Valarmati,
Yes, sir.
could you understand?
Yes, sir.
Yeah. Now you can tell some more points you have in mind apart from certificate of deposit. Certificate of deposit, we will read it again. Pakka. We will read from RBI circular Pakka. Now you tell us about other points, whatever that comes to your mind.
Okay, sir. Next, I will tell you about capital market. Capital market is a long-term fund that will supply amount more than 1 year. And the instruments under capital market are government dated security markets, industrial securities, development finance institution, and financial intermediaries. In government dated security markets or like treasury bills and cash management bills, and it is also regulated by RBI. In industrial securities, there are two things: IPO and stock exchange. And in development finance institution, all Indian financial institutions are under this development financial institution. And financial intermediaries or investment banks, merchant banks, mutual funds, leasing companies, and venture capital. So that's it.
Very good. Alarmati, you have improved your ability considerably. You are able to communicate well. Good. I'm happy. Now, next person to come in line is, was it Ravi Kumar or Porkodi? I think
Sir.
Porkodi. Okay. Porkodi, you first speak, then Ravi Kumar will speak. Porkodi,
Yes, sir.
speak. Porkodi, speak.
Okay, sir. Good evening, all. I am Porkodi. I am from Tamil Nadu. And today topic is financial market. Money market and capital market are the financial market. In money market, money market is a short-term financial market up to 364 days, where financial instruments with a high liquidity and short-term maturities are traded. It is controlled by RBI. Money market instruments are treasury bill, certificate of deposit, commercial paper, cash management bill, repurchase agreements. Already, treasury bills, certificate of deposit, and commercial papers are explained by our friend Manpreet and Valar. So now I explain about call money, notice money, and term money. In call money, loan provided up to for 1 day. In notice money, loan granted for 2 days to 14 days. In term money, loan provided up to 15 days to 1 year. Money market is an unregulated and informal market. It is not structured like capital market. Money market gives a lesser return to investors. Withdrawing money from money market is easy. The risk in money market is low comparing to capital market. Normally, money market is used to implement monetary policies, and also it helps for trade and industry, develop trade and industry in our country. And also it helps for function of banks. Then capital market is a long-term financial market above 365 days that brings buyers and sellers together to trade stocks, bonds, currencies, and other financial assets. Capital market is regulated and controlled by SEBI. Capital market instruments are stocks, shares, debentures, bonds, and government securities. In capital market, things are organized in a formal way. The potential return in capital market is high, but it is more risky than money market. Capital market are classified into categories. They are primary market and secondary market. In primary market, new stocks are sold to investors. In secondary market, existing securities traded. Capital market help individuals generate wealth and invest their funds, invest their future. It is it provide opportunities for different institutions. That's all, sir.
Good, very good. Porkodi,
Thank
very
you,
nice, very nice. A Tiruvarur girl talking this much well. Good. Tiruvarur is not bad. Tiruvarur is the place from where Karunanidhi came and Tyagaraja Bhagavatar came. So many learned persons have come from that. You should develop confidence to speak. If you speak like this, it will go very well. Good. I
Thank you,
appreciate you. After Manpreet, Valar, Porkodi, it is Ravi Kumar now. After Ravi Kumar,
Yes,
Rushikesh. After Rushikesh, Anusha. Yeah.
Yes, sir.
Ravi
Yeah.
Kumar, right, sir?
Yeah, Ravi Kumar.
Thank you for giving this opportunity. We talked about financial market. In financial market, there are two types of market. First one is money market. Money market is for short-term fund. Here, lending and borrowing money for short period of time. Here, validity ranges from 1 day to 365 days. And in money market, there are more categories there, like short-term money, call money, notice money, term money. In call money, we are lending and borrowing for overnight basis. In term money, lending and borrowing for 2 to 14 months. And in sorry, in call money for 2 to 14 days, and in term money, uh, above 14 days to 1 year. In money market, also there is treasury bill. Treasury bill also called as zero coupon securities because here no interest is no interest is here because gives the whatever the face value of the treasury bill, it gives at discounted price so that person can whenever person want money, then he can get same money whatever in that treasury bill face value. Coming to capital market is for long term period, and here wealth generation is there. Here we can create wealth from capital market like securities market. Uh, in securities market, we are buying and selling shares. In capital market, also there is two types of capital market. First one is primary market. Here in primary market, the new share is given to the customer, and in secondary market, already a share is there. That share again for to raise fund from that share is called secondary market. That's it, sir.
We will go to after Ravi Kumar, Rushikesh.
Good evening,
Rushi-
all.
Good evening. Yeah.
Today's topic is capital market and money market in India. Firstly, money market. Money market is regulated by the RBI, and it is the short-term market, maximum for 1 year. On the basis of a tenure, money market classified into three types: overnight market or call money. The tenure of a transaction is for 1 working day. Notice money tenure for 2 to 14 days, and in term money tenure for 15 to 1 year. Instrument of a money market involves call money, repos, T-bills, treasury bill, cash management bill, commercial paper, certificate of deposits. Firstly, treasury bill are short-term debt instrument issued by Government of India, and it consists of three term tenure, that is 91 days, 182 days, and 364 days. Treasury bill are zero coupon securities, and no interest is pay. They are issued at the discount to the face value. Then cash management bill. It is a short-term security sold by Government of India to raise the temporary money for a cash management need. And dated securities are a long-term security which carry a fixed or floating coupon which paid on the face value. And commercial paper, it is an unsecured money market instrument. It is issued in the form of a promissory notes held in a dematerialized form from any of the depositor approved by and registered with the SEBI, and the certificate of deposit issued by bank and financial institutions. It is a negotiable promissory note, and the amount deposited in the minimum is 5 lakhs and multiple of 5 lakhs for 7 to 1 year. Then second, coming to the capital market, it is regulated by SEBI, and capital market is a long-term market. Capital market consists of a primary market and the secondary market. In the primary market, new funds are offering like a initial a public offering, follow on public offering, and the secondary market uh, consists of bonds, debenture, mutual funds. That's it, sir. Thank you.
Good. Very good. Next is Anusha.
Yes, sir.
Can
Good
you
evening,
speak?
one and all. Yes, sir.
You're coming after so many days, correct?
Yes, sir.
You are from which state, Anusha?
Andhra Pradesh, sir.
Acha, you came once or twice. Yeah. Please speak.
Yes, sir. Financial market consists of various types of markets like money market and capital market. In money market, we have money. It is a mechanism. It deals with lending of short-term loans that is less than 1 year. In money market, we have call money that is money lent for 1 day or overnight basis. And we have notice money. This is it refers to lending of funds for 2 to 14 days. And while coming to term money, this money is lent for 15 days to 1 year. Here in money market, we have instruments. We have treasury bills, certificate of deposit, commercial paper, repurchase agreement, and bankers acceptance. In treasury bills, it is a short term borrowing instrument of government of India. It here These instruments, these are auctioned by Reserve Bank of India at regular intervals and issued at a discount to face value. Here we have maturity of in three maturities, that is 91 days, 182 days, and 364 days. This primary objective of issuing these T-bills is to fulfill the short-term money requirements of Government of India. These are available with minimum amount of 25,000 and multiples of 25,000. Certificate of deposit, it is negotiable money market instrument. It is for as Usion's promissory note. Certificate of deposits are issued all scheduled commercial banks and all India financial institutions. They are eligible to issue certificate of deposit. And here maturity lies between 7 days and not more than 1 year. There is no lock-in period for certificate of deposits. These certificate of deposits can be issued in dematerialized form, but also there is, according to Depositories Act 1996, investors can also opt for seeking certificate in physical form. And next, while coming to commercial paper, it is unsecured short-term money market instrument issued as Usion's promissory note. Here, money instrument is in the form of a promissory note. All primary dealers and all India financial institutions can issue these. Individuals and companies, fund houses can invest in commercial paper. While coming to bankers acceptance, it is a money market instrument. This is issued by company, that is issued by commercial bank. Uh, it has been used in for financing in international trade, that is goods buying or by banks customers. Whereas the maturity lies between 30 days and 180 days. It is a short-term negotiable instrument. Whereas while coming to repurchase agreement, it is a short-term borrowing of for primary dealers in government securities. While coming to capital market, that is which is regulated by SEBI, that is Securities and Exchange Board of India. Here, these instruments are issued to raise funds. We have primary market and secondary market. For primary market, this is a market where equity or debt capital is raised by issuers through process of private placement, initial public offer, preferential issue. These like equity market, it is available for the company to use as long money as it is needed. Here the investors are owners of the business. While coming to debt capital, we have these are to be written for after a specific time. These earn a like a certain fixed rate of interest, and they can return principal after their maturity. Whereas in primary market, we have initial public offer, that is when shares are offered to the public for the first time. Whereas in secondary market, these are listed on the stock exchange after the public issue, so they can be traded between investors. If they want to buy, they can buy, or they want to sell, they can sell. Whereas for this we use Securities and Exchange Board of India. This is the regulator for commodities market. Here it was established in the year 1992. It got actually when it was started, it got statutory status, that is until 1992. Actually, it was a independent body which was started in the year 1988. In 2015 also, for Forward Market Commission, it was merged with SEBI, and the first chairman is S.A. Dave. Now the current chairman is Madhabi Puribut, sir.
Good. Anyhow, thank you. I think all of you talked very nicely. All of you talked really nicely, but then let us go through some of the papers which I have marked. To start with, I think first person, Manpreet. Manpreet, I am sharing this with you. You will read it. And if any correction to be made, we will make, because many of these materials are there in the internet for quite some time, but there can be some changes that have happened after that. Let us try to find out that. Manpreet Kaur, please read.
Money market versus capital market. Key differences. The following table summarizes the key differences between money market and capital market. Basis of difference. Money market, capital market.
Purpose.
Purpose. Money market to meet working capital requirements. Capital market become part of the asset base of the firm. Function of money market is short-term credit requirements, and function of capital market is long-term credit requirements. Nature of the money market is informal, and nature of the capital market is formal and regulated. Classification of money market, no subdivision, and classification of capital market is primary market and secondary market. Instrument of money market is T-bills, commercial paper, certificate of deposit, etc. And instrument of capital market is bonds and stocks. Mode of transaction in money market is over.
Mode of transaction.
Mode of transaction in money market is over the counter, and mode of transaction in capital market is exchange. Liquidity of money market is more liquid than capital market instrument, and liquidity of capital market is less liquid than money market instruments. Maturity period of money market is 1 day to 1 year, and maturity period of capital market is no stipulated time. Risk in money market is low risk, and risk in capital market is high risk. Investment duration of money market is short term, and investment duration of capital market is long term. Returns in money market is stable returns, and returns in capital market is market linked.
What do you understand by market linked, Manpreet? What do you understand by money risk? What is the market linked?
Investor get interest according to the market. When market is high, then interest rate is also high.
It is related to the stock market.
Low, then
stock market. Bombay Stock Exchange, National Stock Exchange, and all that. Good.
Shares, no, sir.
Pardon? Shares. It depends
Yes,
on
sir.
the value of shares and other instruments also. We don't know what other instruments are there. Now returns, please read. Stable returns, market link. Now participants.
Participants of money market is Participants of money market is banks and financial institutions, and participants of capital market is banks and financial institutions.
No. Here.
And participants of capital market is stockbrokers, mutual funds, retail investors, insurance companies, stock exchanges, underwriters.
Yeah. Relevance to economy. Acha, what about others? Valarmati, are you hearing
sir.
her properly, or
No,
it
sir.
is coming? It is coming different. So that means the problem is with her only, because yesterday Rogers people came and they rectified. They changed the modem also. So now I am getting normal speed. Of course, speed is not much. Here it is 87 Mbps. Doesn't matter. Now, good. Manpreet, you read very well. Now we will go to our Valarmati. Valarmati, you can read this. What is a money market?
What is a money market? A market for securities that have a maturity of less than 1 year is a money market. The securities in the money market are short term in nature, highly liquid. A few of the money market instruments are treasury bills, repos, certificate of deposits, and bankers' acceptances. The primary function of the money market is to cater to the immediate cash needs of the economy. This is usually done by adjusting the cash positions of different players in the market. In other words, the money market caters to the liquidity needs of the economy. The money market also helps in mobilizing funds across different sectors of the market. When investors have excess funds in the short term, they invest in the money market. Other players in the market use these funds to fulfill their short term cash needs. Due to the high liquidity of money market instruments, channelizing savings to investments is easier. The interest rates of money market instruments serve as a benchmark for all other debt securities. Moreover, RBI and the government use money market interest rates to frame future monetary policy. The major players in the money markets are RBI, banks, non-banking financial companies, and acceptance houses. Moreover, all Indian financial institutions and mutual fund houses can access, call, and notice money. Individuals, companies, firms, and other institutions can invest in treasury bills and other money market instruments. Features of money market. Following are the features of the money market. Liquidity. Money market instruments are highly liquid assets that generate fixed income for investors. The short-term maturity of the instruments makes them a highly liquid asset. Hence, they are quite close substitute to holding cash. Safety. The issuers of the money market instruments have a high credit rating and the returns are fixed. Also, the risk of losing the investment is almost zero. Therefore,
Losing the investment.
Also, the risk of losing the investment is almost zero. Therefore, these instruments are one of the safest and secure options available in the market. Returns.
1 minute. Yeah, returns.
Money market instruments are issued at a discount to their face value, and the maturity amount is decided in advance. Unlike the capital market, the returns are fixed from these investments, which is highly correlated to market performance. Therefore, the investor can easily anticipate how much they can earn through the investment. As a result, they can choose an option that best suits their investment needs and horizon. Types of money market instruments. Following are the different types of money market instruments. Treasury bills. The Reserve Bank of India issues the treasury bills on behalf of the central government to raise funds. Treasury bills are short term financial instruments with a maximum maturity period of 1 year. There are 14 days, 91 days, and 364 days. Sir, is it correct?
Yeah, this is correct. 364 days. Here, treasury bills, they give only for 364, not 365.
So that is correct, sir. But in treasury bills, 91 days, 180 days, and 36 days, like that I read.
Oh, maybe. There can be a
But
change.
here it is given 14 days.
Yeah.
182 days, sir.
Oh, maybe there has been a change. 1 minute. India
91 days.
India treasury bills duration. At present, treasury bills are of 3 maturities: 91 days, 182 days, 364 days. You are right. That is 14 days is not there. 91, 182, and 364. Good. Very good. You told correctly. This is, I think, some old material, I think. So. Doesn't matter. Good.
They are issued at a discount and repaid at par on maturity.
Very good. Next is our Porkodi. Porkodi, bill of exchange.
Yes, sir. Bills of exchange are commercial bills. Business issue bills of exchange to meet their short-term money requirements. The creditor can discount their bill of exchange with a broker or a bank. They are highly liquid instruments as they are transferable from one person to other. Commercial papers. Large businesses and corporations issue commercial papers to raise capital to meet their short-term business requirements. These corporations have high credit ratings, which acts as a security to the unsecured commercial papers. Commercial papers have a fixed maturity that ranges from 7 days to 270 days. Furthermore, investors can trade commercial papers in the secondary market.
No,
Certificate of
no, we will skip that. We will read RBI material. Please read this. Repurchase agreement.
repurchase agreements. Repurchase agreements, also known as repos, is a legal agreement between two parties. One party sells a security to another. Promise of purchasing it back from the buyer at a later date. The seller buys back the security at a prefixed date and amount. The interest rate that the buyer charges is a repo rate. Repos are a quick way to raise short-term capital requirements that also earn good returns for the buyer. Banker's acceptance. Banker's acceptance is a financial instrument that an individual or a business creates in the name of a bank. The issuer has to pay the instrument bearer a specific sum on a specific date. It is usually anywhere between 30 and 180 days after the issue. As a commercial bank guarantees the payment, it is a safe financial instrument.
Very good. Next, we will go to our Ravi Kumar. Call and notice money.
Call and notice money. In a call money scenario, the funds are borrowed for a period of 1 day. On the other hand, in notice money market, the funds are lent up to a duration of 14 days. Both options do not have any collateral security. Cooperative bank and commercial bank borrow and lend funds in call notice money market. Mutual fund and financial institutions are only lender of funds.
Very good. Wait. Now I think we should go to this. I think this is telling about certificate of deposit. This is about RBI, and I will give the link in our WhatsApp page. Here they are telling about explanation about what is bank, everything they are telling. Who are the eligible issuers of CD, they are telling. Who are the eligible investors, they are telling. General guidelines. Here only you read Ravi Kumar. General guidelines regarding certificate of deposit. Primary issuance.
In primary issuance, certificate of deposit shall be issued only in dematerialized form, held with a depository registry with Security and Exchange Board of India. Certificate of deposits shall be issued in minimum denomination of 5 lakh and in multiple of 5 lakh thereafter. The tenor of certificate of deposit at issuance shall not be less than 7 days and shall not exceed 1 year. Certificate of deposit shall be issued on T+1 basis, where T represents the date of closure of offer period of issuance certificate of deposit.
That will do. This much will do. I will give this link in your WhatsApp page. And I think I can give some more links also. So many links I have. I will give all these links so that you can read them and try to update your knowledge. So thank you so much for participating in this excellent discussion. But from the point of view of Bank of India interview, it is sufficient you make out about 5 to 6 lines points on interview only, how to face that. For that, you prepare it briefly, and most of you told very nicely. Prepare it, that will be sufficient. Thank you so much. Tomorrow, Saturday, no class. Sunday, no class. And on Monday, which topic would you like to have? Any preference? Anybody has got some preference for any topic for GD? Any topic for GD group discussion ideas.com? We will go there. And the latest topic that is coming is clean tech, energy transition, digital health. And then Chandrayaan 3 we have completed. Will threads kill Twitter? And India UAE we have already discussed. I think we can take up clean tech. Please take the topic clean tech. And thereafter, next day we will do energy, and then this one digital health. These are the common topics. These are being talked about in the market. So they will be asking only from this in the real GD of Bank of India. I don't know when they are going to conduct that. And more than a month has passed without any results. Anyhow, let us wait for that. No problem. Thank you so much. Monday, 7 o'clock. And if perchance I forget, Monday as it is, I'm not
Sir,
very...
5 o'clock or 7 o'clock, sir?
Did I say 7 o'clock? Oh,
Yes.
first. Which time is suitable for Valarmati?
So for me, both are okay.
7 means
That's fine.
your husband would have returned from office, na? Or,
Yes, sir.
so let us not disturb him. We will have it at 5 o'clock only. No problem. So 31/7 is the date on Monday. As usual, we have at 5 p.m. Spoken English. The topic is clean tech. Okay. Very good.
Okay, sir.
Any doubts for anybody else? Any doubts, please? Any other doubts you have? Otherwise, 1 minute. Why it is closing? I don't know. Stop sharing. Yeah. Battery saver. It is battery is not there. Okay. Thank you so much. I'll close this with this. Thank you. Bye-bye.
Thank you, sir.
Thank you.